India is 101 financial final adaptation of Indian accounting standard. India is 101 preceding the accounting present. The first time adaptation of India is India is it lays down the various transition requirement when the company adopt NDAs for the first time. That is move from the accounting standard Indian GAAP to NDAs. Consumption in the accounting with the NDA should be applied retrospectively. At time of the transition of NDAs, however, in case of processing of transition, that is NDAs provide certain exemption for retrospective applications in NDAs. The exemptions are broadly categorized in those which is mandatory in the nature. That is, in the case of companies not allowed to apply the NDA successfully, and those which are voluntarily in nature. That is, a company may elect not to apply certain requirement of NDA retrospective. NDA is 101 is prescribed presentation or disclosure requirement to explain the transition to the users of financial statements, including explaining how the transition from Indian GAAP to NDAS affecting the company's financial position, financial performance, and cash flow. The NDAS 101 does not provide any exemption from the disclosure requirement to other NDAs. So, definition NDAS 101 defines various terms used in the standards. Uh, these are contained in the appendix A of NDAS 101. These definitions are important to understand the requirement of NDAS. Some of the key definition of the given below. Date of transition to India is the beginning of the earliest period in which the entity presents full comparative information under NDAS in first NDAS financial statement. Deemed cost. Deemed cost. A amount uses an surrogate for a cost or depreciation cost at the given date. Subsequent depreciation or amortization assume that the entity has initially recognized the asset or entity has recognized the liability at the given date and then the cost has been equal to be deemed cost. First NDA's financial statement. The first annual financial statement in which entity adopt NDAs by an explicit and unreserved statement of compliance with NDAs. First NDAs reporting as a period. The latest financial period covering for the entity's first NDA's financial statement. First time adopters the entity that presents the first NDA's financial statement. Opening NDA's balance sheet. An entity's balance sheet as a date of transition to the NDAs. Previous gap. The basis of accounting that first time adopter used for the statutory reporting requirement in India immediately before the adoption of India is, for instance, company required to prepare their financial statement in accordance with the section 133 of the Companies Act 2013. Such consideration, those financial statements are previous gap financial statement. Objective to ensure that the entity's first NDA's financial statement narrates interim financial reports for the period of covers by the financial statements contains high quality of information that in transparent and comparable overall period presented provides a suitable stating point for accounting in accordance with the NDAs. It cost does not exceed the benefits. The cost does not exceed benefits. Provide a suitable standing point for the accounting in accordance with the NDAs. Okay. Transparent to comparable to all presenting scope. The entity shall apply NDAs in the first the entity shall apply the NDAs in the first NDAs financial statement and such interim financial report. If any, that is presented in accordance with the section NDAs 34, interim financial statement for a part of period covered by its uh, first NDAs financial statement. Scope is the entity shall apply in case 101 in the first NDAS financial statement and such interim financial report, if any of it presented accordance with the NDAs 34 interim financial report for the part of period covered by the first NDAs financial statement. Opening NDA's balance sheet. An entity shall prepare and present an opening NDA's balance sheet at the date of transition to NDAs. It is starting point for accounting in the accordance with NDAs. Accounting policies. Entity shall use the same accounting policy in the opening NDA's balance sheet and throughout the period presenting the first NDA's financial statement. These accounting policy should comply with each NDA's effective at the end of the first NDA's reporting period. Subject to mandatory exemption and voluntary exemption if elected, an entity shall in the opening NDA's balance sheet recognize all assets and liabilities whose recognition is required by NDAs, not recognize items and assets and liability if the NDAs do not permit such recognition. Classifying the item is recognizing in accordance with the previous gap as one type of asset and one type of liability or component of equity, but are different types of asset and different type of liability and component of equity in accordance with the NDAs. Applying NDAs is in measuring all the recognized assets and liability. The accounting policies in our opening NDA's balance sheet may differ from that those that are used for same date using previous gap. Accounting policy in the opening NDA's balance sheet may differ from those that is used for the same date using previous gap. The resulting adjustment arise from the events and transaction before the date of transaction to NDAs, which shall be recognized directly in retained earning or if appropriate another category of equity at the date of transition to NDAs. Estimate. Preparing NDAs estimate at the date of transition to NDAs retrospectively. Entity must use the input and entity must use the assumption that had been used to determine the previous gap, previous estimate as of that date. After the adjustment to reflect any differences in accounting policy, entity is not permitted to use the information that has become available only after the previous gap estimates were made except to correct an error. They can't use it. Presentation and disclosure. The NDA is 101 does not provide exemption from the presentation and disclosure requirement in other NDAs. NDAs requires that an entity's first NDA's financial statement shall include at least three balance sheet, two statement of profit and loss account, two statement of cash flows, and two statement of changes in the equities and related notes, including comparable information of all the statement presented. NDAs 101 requires disclosure that explain how the transition from previous gap to NDAs affect the entity's reporting financial position and financial performance and cash flow. This includes a reconciliation of equity reporting under the previous gap to equity under the NDAs. A. At the date of transition of NDAs. B. The end of the annual period reporting under the previous gap. Reconciliation of total comprehensive income for the last annual period reported under the previous gap to the comprehensive income under the NDAs for the same period. Explaining the material adjustment that were made in adopting NDAs for the first time to the balance sheet statement for the comprehensive income and statement of cash flow. If errors in the previous gap of financial statements are discovered in the course of transition of NDAs, those must be separately disclosed. If the entity recognize or reverse any impairment losses in preparing the open NDAs of balance sheet, thus must be disclosed and appropriate explanation if the entity has elected to apply any of the specific recognition and measurement and exemption permit under the NDAs for the instance if it used for fair values of deemed cost. Explanation to transition to NDAs. The NDAs 101 requires that entity should explain how the transition from previous gap to NDAs affects its reporting balance sheet and affects the financial performance and affects the cash flow. Exemption to the retrospective application of other NDAs. NDAs 101 prohibits retrospective application for some aspect to other NDAs, that is, provide mandatory exemption in relation to the following estimates, mandatory exemption to estimate, mandatory exemption to re D recognition of financial asset and D recognition of financial liability, mandatory exemption to hedge accounts, mandatory exemption to non-controlling interest, mandatory exemption to classification and measurement of financial assets, mandatory exemption to impairment of financial assets, and mandatory exemption to embedded derivative, mandatory exemption to government loans. An entity estimates in accordance with the NDAs at the date of transition to NDA should be consistent with the estimate made for the same date in accordance with the previous gap for adjustment to reflect any difference in accounting policy unless there is an objective evidence that the estimate was error. Further, NDAs 102 provides exception, optional exemption to conduct some reference to the NDAs, where it has been felt the retrospective application can be difficult or could result in undue cost exceeds any benefit user. Entity should not apply this exemption. By analogy to other items, the entity must elect to use one or more of the exemption in the form related to the following: business combination, share-based payment transaction, insurance contracts, deemed cost, leases, cumulative transaction differences, long-term foreign currency monetary, investment in subsidiaries, joint venture associates, assets and liability of subsidiaries, associates and joint venture, compound financial instrument, designation of previous recognized financial statement, fair value measure of financial assets and fair value measurement of financial liability at initial recognition. A decommission of liability, including cost of property, cost of land, and cost of equipment. Financial assets or intangible assets are accounted for accordance with the Appendix D of India's 115 Service Concession Arrangement. And borrowing costs, executing financial liability with equity instrument, severe hyperinflation, joint arrangement, stripping costs in the production phase of surface mining, and designation of contracts to buy or sell non-financial items, revenue, non-current asset held for sale, and discontinued operation, foreign currency transaction, advance consideration.